Hi, this is Hyperwave. We have Thor. I was gonna coax him with a treat, but right now we would just we'll just let him have fun. And we're excited to be back. We have Tyler back, and this is gonna be a fun one. We're gonna get a peek inside his brain. Tyler, tell us a little bit about what we're up to before you jump straight into those charts.
Yeah, absolutely. We've been getting some really interesting questions from our group called the Hyperwave Research Group about various charts and how I look at charts. And, to me, I thought I'd covered a lot of this stuff in Consensio, but the more I thought about it, I really haven't. So this is going to be, we're going to talk about four things, basically: Bitcoin prices, right up through today, obviously, and gold prices, because I made a couple of comments on Twitter about gold and silver prices and gold mining shares. But I'm not doing it from the perspective of those things and their prices. You'll get that out of it because we're going to look at those charts. But I just wanted to give everybody a summary of what it is I'm looking for and why I draw conclusions very quickly after I look at a chart. So I want to go through this. I want to show you the sequence that I look at a chart. And I don't really care at all what the name is on the chart. I don't care what industry it is. I don't care if it's a crypto or Bitcoin or gold prices or Tesla. It's just a chart to me, and that's going to be the starting place. And so what we'll do is, you've heard me say over and over again that the long term is the most important. So that's what we're going to look at first, is the long term of all the charts. And then the intermediate term, and then the short term. And most people are most interested in the short term. I'm the least interested in the short term. I don't really care, because I can tell what the short term must do if the long term and the intermediate term continue the way they're doing, whatever they're doing. So when a consulting client calls up and they say, what about this stock? And I say, I haven't followed that stock, but give me 15 minutes and I will give you my thoughts about that stock. And what I will do is I'll go through a sequence very quickly of looking at the chart of that stock. And after I do that and draw conclusions, I will start looking at the fundamentals of whatever it is that we are looking at to try to figure out, why is that chart telling me that story? And if I can't come up with answers, I will dig deeper on the fundamental side to see what the chart is telling me. Because the chart, as you know, in my opinion, is the only thing that matters. And the long-term chart is the only thing that matters, but everything else goes into that long-term chart. The intermediate term, the short term, the very short term, and all the fundamentals, which are daily occurrences and are cumulative, they all end up showing up in the charts. So with that as an overview, it's going to sound like Technical Analysis 101, but I think you will understand the sequence of what I am doing and why I am doing it. Now, I have not done this my whole career. I've done what I'm about to show you for the last 25 years of my career. The first 15, I did everything that everybody else does because they were teaching me. You know, when I became a broker, then when I set up my own firm, my partners taught me what they knew, and very smart clients taught me what they had learned, and various people taught me various technical analysis systems, and I tried this and I tried that. And finally, after years and years of trying all that stuff, I did what made the most sense to me, and that's what I've been doing ever since, and that's what I'm now going to walk you through. And this is not going to take very long. We're going to look at two of every chart. We're going to look at a 5-year chart and a 1-year chart, except for Bitcoin. We'll look at the whole 10-year hyperwave and then the near-term chart. So we're only going to really look at a total of 10 charts, a longer term and a shorter term. And then I'm going to explain what it is I'm looking at. So with all of that, I am going to go to screen share and I'm going to pull up Bitcoin charts because that was pretty interesting over the last week and fairly controversial. And a lot of people said a lot of nice things and a lot of nasty things because of what Tone believes, what I believe, what Willie Woo now believes with his system, what Van Zen believes. But there's not very many of us that think this is going lower, and we've explained why. All of us with different systems, all of us looking at each other's systems, but let's take a look and see what is going on in the world of Bitcoin right now. Okay, this is a long-term chart. First thing I do is I forget that I'm looking at Bitcoin, because if I know what I'm looking at, then I prejudge what I am looking at. So this is simply to me a chart. And this chart goes back to the beginning of 2017. And what it clearly shows to me is something that I recognize as what's called a hyperwave. So that's unusual. Usually when I look at a chart, it is not a hyperwave, it's something else. But the first thing I see is this thing went from $750 over here on the left to $20,000 in less than a year. And then I quickly noticed that it went from this area in the $1,800 to $2,000 range to $20,000, 10x in 6 months. And then I quickly noticed that it went from this range, $5,000 to $6,000 to $20,000, or 4x in 2 months. So that just jumps out at me, and I don't care what I'm looking at. Our group has found 50 of these things that are active right now today. Now it's probably closer to 75. And so we've got 400 charts that I can look at like this, and they almost look all identical, small changes, but I immediately know what I'm looking at. I'm looking at a hyperwave, and I know that hyperwave does two things. One is it only goes up for a while, and usually a very long while, and it goes way, way up, and then it stops going up and it goes way, way down. And that's what this chart is doing. It went way, way up, it stopped, it's been going way, way down, and it's still going down. And I say it's still going down, forgetting that it's Bitcoin, because the chart tells me it is, because it hit a high and then came to a low, and then hit a lower high and came to a lower low, and then hit a high and came to the same low, hit a lower high, came to the same low, and then hit a lower high again. Now, I'm not going to project it going to another high or to a low. But as of this moment, this chart has only two characteristics. On the left side of the chart, over a 1-year period, it ran way, way up. And on the right side of the chart, it's coming down, and it's still coming down. It's tried on a number of occasions, 4 to be precise, 1, 2, 3, 4, to stop going down. And the previous 3 have failed, and now we're in the 4th one. And right now, on this weekly basis, we've got a negative weekly action going on because of what has happened over the last 4 or 5 days. So I'm not going to project and say that this chart is going down or up from here. Except I've already said that I have classified this as the rare thing called a hyperwave. And that's a different question, because now I can make projections. I can make projections as soon as I know this is the top of where the bottom is going to be. And the answer to that, as you all know, is 1,000. So up here, when it was clear that that was the top, because the fourth phase of a hyperwave was broken, I already knew where the target was. It's 1,000. Now we haven't hit 1,000, but that's the target. And why is it? Because the other 500 that I've looked at, except for these things called funky hyperwaves, that's where it goes. But what I'm describing to you is a particular kind of a chart that has characteristics that I can pick out very quickly just by looking very quickly at this chart. Okay, but now let's forget for a second again that this is Bitcoin. Let's also forget that this is a hyperwave. Let's say I'm an analyst who's never heard of a hyperwave and I'm just studying charts, which I do on all the other charts that are not hyperwaves. So let's just pretend this is not a hyperwave. Well, just because I see something go way up and go way down doesn't give me very many clues of where we are right now. So then I begin overlaying various things. The first of which I'm going to do now is a series of moving averages. And what I like to do, but can't do on most charting things, is I like to get rid of the price. And then I like to throw the moving averages up. Because now let's assume I don't know it's a hyperwave. I don't know it's Bitcoin. I'm just looking at these three wavy lines. And I'm asking myself from these three wavy lines, where are we right now today? What is this telling me? And what it's telling me, remember what I said at the very beginning here, is the long term is the most important. And this is the long-term average. And it had been going up for years, at least 3 years, without going down. But now it's going down. So that's important to me, that sometime in June going into July, whatever this is, Bitcoin or whatever it is, was doing very, very well on a long-term basis, but that stopped only 60 days ago, or maybe only 45 days ago, because the long-term trend of this thing I'm now looking at is officially down. That's number one. Number two is that the intermediate term has broken below the long term and is below the long term and has been going down, but is now turning up a little bit, and so is the short term. So the short term is cutting through the intermediate term, and the intermediate term is now moving up. So I register all of that, and I come to the conclusion that we're in a short-term bounce of some kind with whatever this thing is, but the long term is still negative. Then I throw the prices back on and see what the heck is it I'm actually looking at. And I say, oh, okay, I'm actually looking at a hyperwave. And okay, when I put the price on, I see that this long term is very important because the price came down to it and bounced off of it, and then came back down to that long term, broke it, bounced back up to it, fell away from it. And then in those up moves that I talked about before, one of them went up trying to get away from that long-term moving average and came back down to it and broke it. The second one tried to get up to it and break it and couldn't break it. I'm going to assume that this next one is going to have a lot of trouble breaking through that long-term moving average. Why? Because here it was moving up, which meant that the momentum was still up on the price of this thing, whatever it was. But now that momentum is going down. So the probability of this little bounce being able to break through this coming down, because it is coming down, is less than it was here. Here it was able to hold and break and hold above it. But then even though the line was going up, the price went down, a huge sign of weakness. The second huge sign of weakness is when we tried to get back above a rising moving average, which is usually a very bullish thing. It could not do it. Now it's going to try to do it. It's done it for 2 weeks, tried to get above it, but the moving average is no longer bullish, it's bearish, which means the probability of breaking out to the upside is less than it was here. And we have weakened greatly from when we were able to break above it here. So I quickly look at all of that. I come to the conclusion that from a moving average point of view, I am not impressed with what I see. Then I look at the things that you and I've talked about, stop and reverse points. I see, okay, this bounce has been able to break that. That's a positive. So maybe something is going on here. I look at the Bollinger Bands and I say, well, so far, this has been negative all along, but here we did get above the middle. But now look what's happening. Now that we're above the middle and we, not the entire candle, but we did close above the middle line. Now we've got an entire candle above the middle, but it's turning negative. And we're only halfway through the week. I am going to watch this very carefully to see if we can hold that middle line of around 7,500. We have done it so far today as we look at shorter term, but this gives me pause for some concern. Also, I dropped down here to the RSI, which had gotten above 50. And I know that I've been saying that I am negative. The RSI is very negative to me in this particular chart, whatever it is. It happens to be Bitcoin, because it needs to go oversold because of all this activity. It did not do it. We got back over 50, and I said, this is not good. A lot of people are interpreting this as good because we're back to the middle of the trading range. But I said, that is only tells me that if this starts turning down again, it's got further to fall. And lo and behold, in this last 2 weeks of struggling at that middle line, it's been enough because of the action this week to actually turn that RSI negative and back below the 50. So that again is negative to me. So on a long-term chart, that's what I do. I go boing, 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 boing. I go from the longest term. I put on things that I know. I then check it with other things that I know. I want everything to confirm what I'm seeing before I draw a conclusion. Now, I then start dropping down to shorter time periods. I'm going to take off anything having to do with the technicals. And now we go to the, instead of the long-term chart, we look at intermediate term. And the easy way to do it on charts like this is simply change the scale from weeks to days. So we just went from weekly chart to a daily chart, and all of a sudden we've cut the chart in half, and we're only looking at from the top to where we are now. And we can see these periods, how many days of movement counter the major trend you get. Here you get 1, 2, 3, 4, 5, 6, 7. Here you get 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10 is down. Here you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and down. Here from the bottom, you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 is down. So my quick assumption on an intermediate term daily basis is this thing is rolling over as all the previous ones did, because my long-term moving averages were moving down. So I am now expecting weaker action just off the basis of these charts. Not because it's Bitcoin, not because it's a hyperwave. Simply, it could be Tesla, it could be General Motors, it could be gold, it could be silver, it could be anything. It doesn't matter. It's all in the price. And this price is telling me that it's had another try to the upside, and now it's beginning to roll over again. And we saw that action today. We're getting a new little daily thing because we're past 8 o'clock and it's slightly positive. but we've got 24 hours to go to see what happens. Okay, so then we want to drop down even further. And the best way to do that is cut it in, half or in quarter. We'll go to a 6-hour chart. And now we've got the whole story of the bounce. We went from 6,000 up to 8,500, a lot higher than I thought it would. But then at 8,500, it went sideways for a very long period of time with big down followed by a big up, a big down followed by a big up, a real war going on between traders, but it's being resolved to the downside. All of this action in these 6-hour bars are below the lows of this sideways movement from the high. So the war that was going on between traders trying to get it to go higher and the sellers trying to get it to go lower has been won. That war is over, and the sellers have taken control. That doesn't mean they keep control, because we've only come down to an area here that is sitting at the top of this sideways action. We need to get below this sideways action, which isn't too much further down, another 250 points, and we will negate all of this, and then we will test the bottom at 6,000. Now, if we don't do that, if we're able to hold here on this short-term basis, maybe we can get something going on a daily basis, which is more, intermediate term, which could turn out to be something that will turn this weekly candle around, and then maybe there's some more upside to go. So that's the way I would read it. That's the way, in this case, we're looking at Bitcoin. I believe we're in for some more negative action here for the rest of the week, and we'll see exactly how and why that happens. But it's in the context of reading a chart. Okay, I'm going to do the same thing very quickly with GBTC. And I'm going to do it with these charts, which are the stock charts. But let's pretend that this isn't Bitcoin, which it is not, but it looks just like Bitcoin. This is GBTC, which trades at a premium and sometimes at a discount to Bitcoin, but the only holding of it, basically speaking, is Bitcoin. I look at this chart. It's a long-term chart. I see for a long time, from 2015 when it started all the way to 2017, it was flat. It was boring. Nothing was happening. And then all of a sudden last year, it started going way, way up. Now, to me, this looks like a hyperwave because it's acting like a hyperwave, but it really isn't, because we've only got this one angle here of upward action, which is a phase 2. And we went way above that phase 2 line, came back down to it, and then we broke it. It doesn't matter why I'm saying that. All I'm saying is, well, it looks like a hyperwave. It's built on something that is a hyperwave, but in any case, it's a something. Let's pretend we don't know what GBTC is. Let's pretend we think it's a technology stock or a biotech stock that was going flat for years. Then all of a sudden something great happened and it took off. And then people realized it wasn't as great as they thought it was, and it came all the way back down. And now it's halfway between up where it was and where it is. So the question is, what's going on? Now, on this particular charting service, I can't take the price off, but you can see the moving averages. So from the overall chart, what I do is I look at what the moving averages are telling me. This green one is the long-term moving average, and what it tells me is the long-term moving average held here, held again here, then broke. Then it actually was able, this, whatever this thing is we're looking at, was able to get enough strength to get above and close above that long-term moving average, and the long-term moving average was moving up. I would have been bullish at that bar right there, the dark bar, because it closed weekly above the long-term moving average after having broke down below it, and that moving average was moving up. But the very next week, I would have gotten cold feet because it wasn't able to hold it and then begin to drop very rapidly. You can't see it on this chart, but I've got a 2-week moving average in there that would have been a canary in the coal mine kind of a thing for me, like the NASDAQ was, because it propelled all the way back up and then turned down very quickly and then cut through the intermediate term very quickly. So after buying this particular thing, whatever it was, a biotech or a tech, or in this case, GBTC, which was not in a hyperwave, because you've got to have three phases before it's a hyperwave. This only did 2 in my estimation, but it was a spectacular move. Look at the size of this move. From down here, we're trading at $2. Here, we're trading at 40. Here, where Bitcoin really started to take off, we were trading between $6 and $8, and we went to 40. We had a 500% increase. But look at the candle that gave you that ridiculous high up around 40. It actually came all the way back down and closed all the way at here at the bottom. It was. And that has to do with the premium and the discount of this particular thing. But still, really spectacular. Whenever you see a blow off top with a wick like this, you should be very, very careful, regardless if you know about hyperwaves or Consensio or anything else. But what this chart is telling me now is this has been in a downtrend ever since that wild action, even though I would have been sucked in for a week of this action and then right back out as we close back below the long-term moving average. And then now what we're looking at is the long-term moving average moving down, prices struggling to stay above the intermediate term moving average. It did it for 2 weeks and fell this week right up through today, all the way back down. So to me, this is going much lower. Because the long-term moving average is moving down, the intermediate is moving down, and price is now cutting back through that intermediate term moving average. Again, regardless of the time frame we're looking at. So now that's long-term. So now we move to intermediate term. Let's see if what I just said on that longer-term chart holds up under the scrutiny of looking at a much shorter chart. This is still a weekly chart, but we're only looking at a 1-year period, which includes this action, which shows you a little bit better what the moving averages did during these 2 days that we were able to close above the long-term moving average. You see the short term going zipping up through the intermediate term all the way up to the long term, and actually slightly above the long term for a very short period of time. But then immediately on this candle, it went negative, and the next candle, it cut through the intermediate term. The intermediate term had a death cross back before this, and it never was able to get anywhere near the long-term moving average. It's been moving down ever since. So looking at just the last 3 weeks, what I see is the long-term moving down above the short-term, above the intermediate term. The short term for just 2 periods has gotten above the intermediate, but now the price action is going to force that down, particularly if we close below the intermediate over the next 3 or 4 trading sessions, which, because of what I just said about Bitcoin, I expect to happen. Okay, let's move on to something else, gold. Gold, we have been talking about for the last 4 or 5 weeks, telling people that I went from a 15% weighting in gold through this period from here to here, because the long-term moving average was moving up, the intermediate term moving average would come back to the long-term, then go up, and price kept going above it, coming back to it, above it, higher highs, going back to it, higher lows, higher highs, higher lows until right here. My decision on a chart like this is, wow, this is a tough one to play, because in the first half of this chart, it is clearly in a downtrend. Lower high, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low, lower low. Very simple. And the moving averages show me the same thing. So the first half of this 5-year chart, to me, is bearish. The next third of it is very confusing right in here. Anybody that got very excited and jumped into this found themselves very quickly with a death cross and prices unable to get back above the long-term moving average, and we gave up almost all of this movement. So this thing became very confusing. But starting here, where the intermediate gets back above the long-term, I got bullish and I put 5% in, then another 5%, then another 5%. So we were 15% of our assets for my managed clients long gold. We weren't going to put more than that in until we could get above these highs. And my assumption was we were going to get above these highs. And then when it stalled out through this period and could not do it, even though we had 2 or 3 weeks in which wicks or trading was above this high, they never were able to get above these previous highs. Then they rolled over with this particular candle, this doji, right in the middle of this action, and the intermediate quickly cut down through the long term, prices cut down through the long term, and that's all she wrote. A series of things happened on a shorter term basis. We quickly sold 5%, another 5%, zero. We told everybody on this channel that it's time to exit gold if you're in it, and it's too early to buy it if you have not yet bought it, and we've been falling ever since. Now we had this action in the last couple of weeks in which we have taken out this low. We are now in the process of taking out this low. We are challenging these lows, and the momentum is turning quickly down. So I look at that 5-year chart. I say basically we're sitting right now in this area, right where we were at the beginning of this chart. So net for 5 years, unless you were short and then got in and did not get scared out, you haven't made any money in this. If you're a short-term trader, you could be in and out, in and out, in and out, in and out, but that's not what we're talking about today. Let's take a look at a shorter-term chart. And again, it gets very clear that what happens when you go from down to up is one by one, these moving averages fall in line. So you end up with the shorter term above the intermediate and above the long, which is the signal that you're back into a bull move. But they keep flattening out where they're all bunched together at the top, and they need to separate either to the upside or the downside. And that occurred with that candle that I told you about. That drop, taking us out of all of this action, began the slide. And then sequentially, the short term cut the intermediate and the long, then the intermediate cut the long, and then the long turned down. And that's all you need to know, that you're no longer in a questionable state. You're in an absolute state of a downtrend until these 3 lines reverse and the price reverses. You don't have to predict where that's going to be, although you can from longer term charts. You just should not be in this on the long side. Regardless of what you believe about the fundamentals and what's happening in inflation, what Fed policy is going to do, this is a very clear signal to be out of this portion of precious metals. This is the silver chart. We've been warning for some time that silver was weak, looking a lot weaker than gold. Going back to the gold chart, why did I say that? Is because off of this negativity in the first 2.5 years, this chart had all of its action above these lows. And we kept hitting highs that were very close to the highs clear across this chart. Look at the silver chart. That wasn't true. All of this action is well below the action in this down part of the market. So even though silver bounced with gold and came down with gold, it never got anywhere near this $19 to $20 mark. It stalled out at 17, then stalled out at 16 and a half, stalled out at 16, stalled out at 15 and a half, and now it's breaking lows below lows, challenging these lows a little bit lower, and it will challenge the lows from the previous highs that were much, much higher. And we're in a full-blown bear market in silver on this long-term chart. On the short term, you can clearly see that even the long-term moving average has been moving down from the beginning of this one-year chart. It never had positive momentum. It got people excited every time it started these little runs that broke above the long-term moving average. But the long-term moving average is what you wanted to concentrate on all these charts that I'm talking about, and on any other chart you look at. You look at the long-term chart, you then look at the technicals within the long-term chart, and you run those technicals from long-term to intermediate term to short-term in terms of your weighting and your decision-making. This is the GDX, which is the gold mining shares. I mentioned the same thing to you. It looks very similar to a mix between gold and silver. And that's because a lot of these mining shares include both gold and silver. But here you've got the first half of the chart down, a really good move, better than gold, better than silver, but then it gave most of it back, and then it started acting more like silver. It never got up to these highs again. So gold is the strongest of the three. Silver is the weakest of the three in these precious metals mining. The GDXs are somewhere in between. Okay. I would not be in any of the precious metals. I am not and have not been in Bitcoin. And the reasoning is different in each one, but the technique is exactly the same. And if you show me 1,000 other charts, I will use that same technique to draw conclusions about what the short, intermediate, and long-term prospects are for whatever it is. If it's a steel company, if it's an auto company, if it's corn, it all comes out in the price. And that's why technical analysis is such an important way of starting your analysis. In most cases, you can actually end your analysis with it, but I always then get very deep into the fundamentals to try to understand why this stuff is happening. Okay, went on longer than I wanted to, but not too long. We covered a lot of stuff, and maybe there are some questions. If not, I promised everybody, Lee and I are going to continue what we were doing in terms of not only options, we'll take it to the next level. We're going to talk about option writing. We've promised you 2 or 3 other vlogs where we're going to get into a lot more depth in terms of why I think these opportunities are coming so fast and furiously. And then we're going to start leaking out some information about some of the hyperwaves we're finding all over the world in a number of different categories. And all of that will be coming up very shortly. So with that, I'm going to turn it back to Leah.
Great time, Dr. Hyperwave. Let's do a couple questions. For phase 2 line to be considered broken, does it need to close below the phase 2 line on a weekly basis? What confirms that it's absolutely broken?
Yes. Yes. Any of the phase lines in Hyperwave, any one of them, 1, 2, 3, 4, 5, 6, 7, the rule is the same for all of them. As long as price stays below phase 1, phase 5, and phase 7, as long as price stays below those phase lines, those lines are intact. As long as price stays above 2, 3, 4, and 6, phases 2, 3, 4, and 6, as long as prices stay above those phase lines on a weekly closing basis, those lines are still intact. And they are not broken until you get a weekly close, either above or below the proper phase line.
So
yeah, so for phase 2, it is valid until the price, if it's a stock on a Friday, closes at 4 o'clock below that phase line. And that's it. It's over.
So follow up on that. If Bitcoin phase line 2 breaks and price does not go to 1K, but only goes to 2K as the bottom before going up a long-term bull, what does that mean as far as the phases?
Well, it doesn't mean anything. It means the old phase 1 line held. The phase 2 line was broken at 5,400. And when that was broken, the phase 2 line is no longer valid. It's not going to give us resistance. It's not going to give us support. It disappears off the chart. Just the way the phase 3 line did. It disappears when it's broken. It no longer has any power. It's eerie. It's mystical. It's magical. I don't understand it, but that's what happens. So if the phase 2 line is broken, there is no support in Hyperwave down to 1,000. That's why when it was up at 20,000 and it took a big drop, and it was clear that that was the top, I knew where the bottom was. That 1,000 was not pulled out of a hat. It's the phase 1 target off of all hyperwaves when phase 4 is broken, period. Now, your question is, what happens if it goes from 5,000 down to 4,000, down to 3,000, down to 2,000, and never makes it back down to 1,000? Well, I'm not sure what you mean by that. I would be buying as we got closer and closer to 1,000 with small amounts of money on any hyperwave. Once the 2 is gone, it is gone. Now there's only one thing left, which is the 1. So as you get closer and closer to that 1, you want to start getting into this thing. Now, that might mean buying 10% of whatever your target of total of money you're going to put in at 2,000, and then it stalls there and runs back up to 2,500 or 3,000, then comes back down, and then drops to 1,500. Maybe buy another 10%. I would be buying with 100% if it got back below 1,000, because that's as low as the hyperwave goes. At that point, hyperwave disappears. There is no more hyperwave. So then you have to make a decision on this thing, in this case, Bitcoin. It was in a hyperwave. I rode it all the way to the top. That was fun. I made a mistake and I rode it all the way down to the bottom, but now it's gone. So what do I think about Bitcoin? And if it's sitting at 950 bucks and you loved it all the way up and all the way down, it seems like a pretty reasonable place to start buying very, very heavily. I wouldn't buy heavily at 2,000, regardless. Now, if it ran up to 3,000, then 4,000, I would start putting some money in, not a lot of money. And I would treat it like a brand new stock, a brand new movement. It is not a hyperwave once 2 is broken.
Great. Thanks, Tyler. So obviously you love the 2-7-30 moving average. The question is, do you think that this works in any time frame, especially the smaller time frames?
Yeah, it does, but I use it on the weekly time frame. I know Tone gets on my case because on shorter time frames, the 2 is silly. You know, if you're looking at an hourly chart, who cares what it's done for the last 2 hours? But on a weekly chart, 2 weeks is a big difference from a daily chart. it's significant. I call it a canary in the coal mine on a weekly basis. So I use the 2, the 7, and the 30 on weekly charts. But remember, weekly charts to me in all my investing is what I look at, because I'm a long-term investor. I'm looking for long-term trends, and that is defined by me as being longer periods, and many, many weeks or many, many months is out what I'm looking for. So I'm looking for trend lines that are going to give me an indication of what will happen by the end of the year and the second year and the third year, and only longer term moving averages will do that. So the 2 doesn't help me with that. What the 2 gives me a clue of what the 7 might start doing. Remember, the 2 is like a 14-day, and the 7 is like a 50-day moving average, 49-day moving average. And the 30 is very similar to a 200-day. So I'm looking at traditional 14-day, 50-day, 200-day periods, but I'm doing it on a weekly basis using 2 7s and 30s.
Why has the premium on GBTC been declining so dramatically in the recent days?
There's a bunch of people that disagree with me, but I think there, from the beginning, has been the smart money has been in GBTC. It has not been in Bitcoin. I believe that GBTC leads Bitcoin. It clearly led Bitcoin to the upside. I showed you the chart of what GBTC did at the peak compared to Bitcoin. The percentage gains were much, much greater, and they occurred before the gains in Bitcoin did. On the way down, it has not been that pronounced, but it is a way for large institutional money to hedge bets and also to force bets, because they can do it actively by driving premiums up on GBTC or driving them down by buying or selling. I can't prove that, but I've spent my career watching the difference between the futures markets and what happens with discounts and premiums on closed-end funds at various times, and how they can very often lead. So my answer to that question is, as the premium is falling, that is predicting lower prices in Bitcoin.
Great. Oh.
Yep, no, that's in my opinion. I believe that to be true.
So first of all, I really appreciate that your viewer called you Mr. T.
Mr. T, that's great. That's better than Dr. Hyperwave, I think.
I don't know. They're both really good.
Maybe I'll get a mohawk.
Sorry, I had to mute myself. I was laughing on that one. When you were mentioning putting in a little bit of money, I do think this is a great question. What does a little bit of money mean to you, if you could explain that?
Well, it depends on who you are and how you trade. But here's how I trade for my clients, where I have discretion over their account. Gold, well, let's do the NASDAQ as a good example. For those of you that have listened to us for the last 2 or 3 or 4 months, I got very nervous about the NASDAQ and the NASDAQ 100 because of a number of technical things. I just did not like the way I was looking or feeling, and I also saw that there was this thing called a broadening top on the NASDAQ that was not occurring on the Dow or the S&P. So I was fully invested in the Dow, the S&P, and the NASDAQ in various amounts for my clients. Now, the S&P and the Dow are big, heavy, ugly stocks in general. The NASDAQ tend to be smaller, fast-moving tech, biotech, and that sort of thing. However, the biggest stocks on any of the exchanges are the big techs, and they were driving all the markets. The NASDAQ market up, the S&P and the Dow, because a lot of them are in the S&P, and it's a cap-weighted index. So that was driving that market up. But my clients were broadly in the S&P and broadly in large companies, and a very small weighting in the NASDAQ and the NASDAQ kind of companies, because we are long-term investors and we're not placing big bets. But we did have a 15% weighting in the NASDAQ. So if you took 100% of an equity account and you said that 15% of it was in the NASDAQ, that meant that 85% were in all the other kinds of stocks: mid cap, small cap, value, growth, Dow, S&P, the Wilshire total market, all that sort of stuff. Very diversified through mutual funds, basically. But let's just focus on the NASDAQ's 15%. 15% in the NASDAQ, when I started getting nervous, meant that I would take a third of that off, which is 5%. That's what I mean by a small maneuver. I took 5% of total assets, which was 1/3 of this particular asset, the NASDAQ, and I put it into cash. And at one point, I put that cash to work in energy stocks, which we were underweighted because they were the worst performing sector out of the 10 sectors, and the tech was the highest. So we took that 5% out of something that I was concerned about, that we had huge profits in, and put it into something that hadn't been doing anything and was at the bottom, but was starting to get stronger. So it was a reallocation of 1/3 of this position, 15%. We took 5% out and put it into energy stocks. But that still left 10% in the NASDAQ, even though I was nervous about it, because we were getting the short term trading below the intermediate term and the price coming down. And then that occurred again where the intermediate actually cut below the long term, and prices got all the way down to the long-term moving average on the NASDAQ on 2 different occasions during the last 6 months. And on those occasions, I sold another 1/3 of the 15% or 5% and just kept that in cash. Didn't put it back into energy or into anything else. And then when the NASDAQ started climbing again and the moving averages moved up, I put that 5% back, which when you only have 5% left in the NASDAQ, if you put 5% in, you're doubling your position. When you put the last 5% in, you are increasing by 1/3 your position of that 10%, you're increasing up to 15%. But that's what I mean by incremental moves based on what the market is actually doing, not saying, oh, the NASDAQ looks toppy, I'm going to sell everything. Or, oh, the energy has been doing poorly, I'm going to put all my money into energy. That's not what I'm talking about. What I'm talking about on something like Bitcoin, when I say, when I was buying GBTC for clients, our target having to do with anything crypto was 10%. That was the max we would go into. I never put in more than 1/4 of that 10%, or 2.5% of total assets into GBTC for clients. So that gives you some idea, but that's me and the client base. Me personally is very different. Me personally had 100% of certain accounts I had in GBTC on the way up, 0% when the Hyperwave peaked, and then a small percentage that grew to 25% on that one top where we saw GBTC going back above the long-term moving average, quickly reversed back down to 0 when we got below it, personally, because I am a trader in my personal account and I take big bets. That's not investing, that's speculating. That's a different story. And then I will tell you how I look at charts for speculating. That's a very different thing.
Is there a secret to measuring the movement from a divergence?
There is on each technical tool. Each technical tool has its own divergence away from something else. But just in general, there is no way other than you can measure the distance price gets above a moving average historically. And that extreme is something to watch. You can figure out what the average is in a bull market of prices getting above its moving average, number one. And number two, you can also figure out the length of time price stays above a moving average in a bull market and in a bear market. And they can be very great indicators to you of what might be coming up as you get closer and closer to extremes. Now, we're blowing through many extremes in this last 10 years in the US stock market in terms of length, in terms of length of time without corrections greater than a certain amount, greater than 5%, greater than 10%. And all of that analysis that I'm now giving you is really talking about divergence between historical trends and where you are right now. And each technical tool you use, Hyperwave, has got divergence from the average hyperwave in terms of the length of time of a phase, the angle of the phase, how long a price stays above a phase before it comes down and tests it. All of that sort of stuff all falls into the category of divergence. So it's a difficult thing to be specific about.
All right. I think we're done, Ty.
Great. Well, thank you, everybody, for checking in with us. We wanted to do it around 8 o'clock tonight because that was the closing of the daily candle on Bitcoin, and Bitcoin's had some very interesting action. We'll see what happens here in the coming 3 or 4 days. Gold is not interesting at this point. It's in a downtrend. It's in a bear market. If you're in it, please find a place to step aside and stop watching it. It's in a bear market. If you're going to short it, that's a different question, but we're not talking about that right now. So thank you very much.
I really like everybody who's calling you Mr. D.
Oh, great. I'm going to change my name. My real first name is Dean, D-E-A-N, so it's Mr. D.
All right, well, thank you.
Okay, thanks, everybody. Thanks, Leah.
Bye, everybody. Have a great one.